Hello everyone, welcome to the Hot Performance Show here on Kalkine TV. I'm Sage and today we'll be shining some light on today's 5 most shorted ASX-listed shares. And a short position report for the ASX-listed stocks is released by the Australian Securities and Investments Commission on a daily basis. The report is closely watched by investors and traders to get a clue about the securities that are on short sellers' radars, enabling them to design a suitable strategy going forward. And a stock which is having a high short interest level may be an indicator that something is wrong somewhere within the company and needs to be looked at. So here are the 5 most shorted ASX listed shares from last week's report by the ASIC. So Flight Centre Travel Group, Australia's largest retail travel outlet, remains the most shorted shares on the ASX, with short interest rising week on week to 13.3%. A continued rise in the short interest seems to be on account of the emergence of Omicron variant of COVID-19, which is expected to hurt the global travel stocks. And as was widely expected, the Flight Centre Travel Group's share price has started the week deep in the red. And in the morning trade, the travel agent Giant's shares are down a disappointing 11% to $15.21. And this means the Flight Centre share price has now lost almost 18% of its value over the last 2 trading sessions. And recently, the company's shares have been seeing a decline in investor participation amid concerns over the new Omicron variant of COVID-19. And this variant of concern has led to countries shutting their borders to Southern Africa's nations and sparked fears of further lockdowns. Kalkine.com. The short interest of the Australian online retail company rose week on week to 12%, and the Kalkine share price remained under pressure in 2021. An underwhelming update from this e-commerce company last week weighed heavily on its shares, much to the delight of short sellers. The stock has lost following the annual general meeting update, which said that revenue growth during the first 4 months of financial year 2022 hasn't reflected into profit growth. And following Kalkine's tradings update, the team at UBS see challenges ahead for the company but retained its neutral rating and $10 price target in a note today. And UBS notes that Kalkine's reinvestment strategy may increase its operating expenditure. It also reckons this trend is likely to increase with respect to Kalkine's growth model. And one point the broker highlights is that Kalkine's operating expenditure was $15 million for October, up 9% on the entire first quarter of financial year 22. And before we now take a look at more stocks, it's time for a short break.
Boarding pass, please. Hi, I'm Holly Shields and I'll be your host for Kalkine TV's new show, Travel Insights. Tune in to get the latest developments in the travel and tourism space, from updates on restrictions to travel guides to info about recreation and outdoor activities, or tour guides to the financials of the sector. Though the travel industry has been hit hard from the pandemic, there is still potential left for a revival on the back of economic upturn and COVID-safe travel measures. So if you want to know where the travel and tourism space is heading, dust off your passports, pack your bags, and watch Travel Insights every Monday exclusively on Kalkine TV.
Hello, welcome back. Let's take a look at Redbubble now. And the global online marketplace had a short interest of 10.6%. Selling pressure on the stock is the highest ever since the company released a muted quarterly update. And the Redbubble share price has been under pressure for over a month now. The latest bout of pessimism began for the global online marketplace operator following its first quarter trading update on the 14th of October. And following a strong financial year 21, the company is witnessing a fall in marketplace revenue. The company has teamed up with Afterpay to offer flexible payments to customers. And on top of this, the company is partly shrouded in concerns of copyright infringement allegations. Despite the decline in October and the ongoing litigation concerns, one fund manager finds Redbubble compelling. Next on the list is Zipco. This payment solution provider's short interest jumped to 9.4%, and the stock may be aggressively shorted due to the rising competition and frauds in the buy now pay later sector. And Zipco is back in the spotlight alongside its peers as the BNPL industry preps itself for the entry of tech heavyweights Apple and PayPal into the market next year. And this has market watchers peering closely at the sector's next moves, especially with the BNPL pioneer Afterpay's $29 billion merger with Square due for settlement. Investors have been selling down the Zip share price this month despite the release of a positive update at its annual general meeting. Electro Optic Systems. Now, this technology firm specialising in electro-optic design and development for space and defence markets had 9.1% of its shares held short. And Electro Optic is a technology company working within the aerospace market. And most of the company's revenue comes from its defence division, where it produces remotely controlled weapon systems, ancillary products, fire control systems and sensor units. It also has a communication department, creating terrestrial and space communications technologies. The company is also developing SpaceLink, which is a satellite relay solution. Electro Optic has also built strong relationships with weapons manufacturers. As a result, it can make sure its products work with other industry offerings. And the company's also grown significantly over the past few years. Back in 2015, Electro Optic Systems was generating about $30 million in revenue, but come 2020, it brought in $180 million. A significant increase. And noteworthy. And that's why we've highlighted this for today's show. But that is all for now, and we will be back again with the exclusive Hot Performers show. Until then, keep watching Kalkine TV for the latest market updates and related insights. I'm Sage, signing off for now.